Let's get reaction from former Reagan economic advisor Art Laffer. Art, great to see you this afternoon. Let's go ahead and start there with the question of inflation. What should this administration do? I mean, it seems like it's getting out of hand, and they kind of are just saying, we're going to let it go there.
Well, you're right. I mean, the comparison is very close. When we took office on January 1st, 1981, the inflation rate was double-digit. We had a prime interest rate of 21.5%. It's an economy killer. They are looking at something like this, and it could happen. Now, all the inflation indicators are not bad, but some of them are. Gold has been rising quite substantially. All these raw material prices have been rising. I think it's a fool's errand for them to pretend that there is no inflation threat. There is an inflation threat, but it's not guaranteed. But one of the real problems they're doing, Jackie, is they're encouraging people not to work. Now, when you look at this through energy prices, through all of these other things, which are very similar to Jimmy Carter, if you have fewer goods available, the price of those goods will go up. If you're going to give spending power to people who don't work, and you have fewer goods available, they're going to all be bidding for those goods, and you're going to get higher inflation. And that is exactly what's happening. I am very concerned about the long-term future of this economy over the next 2 or 3 years. I mean, I'm very concerned about it.
Well, as far as the administration is concerned, and also the Fed, it seems that the expectations on inflation is that it's transient, right? But if you're a consumer like you and me, yes, Art, and you go to the store, or you're trying to fill up at the pump, you feel it. And I really worry about it here in New York, because I feel like those price rises, because of what we've been through as a result of the pandemic as a city, those prices are not going to come down soon. And I'm talking about everyday kinds of goods. The second layer to this is what you're describing here, this idea. I want to read to you from the Wall Street Journal. They say, quote, "The risk is that as inflation expectations rise, they become embedded in consumer behavior and business decisions. Workers demand higher wages to keep up with prices, no matter the underlying productivity. Businesses pay to keep those workers and then raise prices to compensate." So it's just sort of a vicious cycle.
It is. Well, it is. It's a dynamic that feeds on itself, Jackie, and they're perfectly correct on that. Now, some of these prices may be transitory. In fact, a good number of them may be transitory. But there are base prices that are rising that are not transitory. Now, just to give Jimmy Carter and that administration its due, I mean, number one is they did decontrol airlines. They did decontrol trucking. Commissions on stock trading were decontrolled, all of them having very positive effects. As you may know, we've cut the capital gains tax rate in 1978 by a dramatic amount. None of those things are proposed in this administration. There are none of those offsetting things that Jimmy Carter did do that Biden is not doing. So if I look at this, if inflation does come back, it will be devastating to the Biden administration. And it's something that we really can't afford having. The energy stuff, Jackie, and if I can just 1 second remind
that's
people.
Where I was going to go
Jimmy Carter put on wellhead price controls, making no one want to produce oil. Excess profits tax on energy companies. And then he had the prices at the pumps way below market clearing prices, away those long gas lines, if you remember. You know, this is not the right way to go. Open up those pipelines. Let things flow. Take advantage of good, efficient energy markets.
It's so interesting to me as we're watching what's happening at the pump right now. The Colonial Pipeline story is in focus at the moment, but that's really not, that's one issue. It's a big issue, but not the biggest issue. The reason the prices are going up at the pump is because of the administration's underlying policies. Then you have a problem like this with the Colonial Pipeline, and it just sort of exacerbates everything. So this really could potentially be a crisis if the administration doesn't say, listen, we have to work this out here. Look at the average price for gas there. According to AAA, the national average, $3.04. And we are not even into summer driving season yet, Art.
I know. Well, let me make another statement. I don't mean to panic you, Jackie. That's not what I'm on the show for today. I enjoy being on your show, by the way. But whenever politicians make decisions, when they are either panicked or drunk, the consequences are rarely attractive. And this administration is uniquely qualified to make panic decisions and having them be very detrimental. I am worried about how this administration would handle a crisis. And that is really what terrifies me, is what they're going to do, not what they've already done. And I don't think this administration is capable of making good, pro-growth, efficient decisions. and helping the economy out of these crises.
Yeah, and Art, I could sit here and have this conversation with you for hours. We could talk about the crisis at the border. We could talk about the crisis in foreign policy right now and what we're presenting as a country out there to foreign leaders.
It's the same as Carter.
But unfortunately, I don't have enough time to do that. I appreciate seeing you today, though, and getting your take on these couple of issues. And I want everyone out there to be sure to catch more from Art this afternoon on Larry Kudlow's Tax to the Max special today, 4 p.m. Eastern Time, right here on Fox Business.